The market gets obliterated while I'm away. Is the pain over, or is it just getting started? This is Invest with Jacob. Okay, guys, so in last week's video, we talked about the fact that the market was approaching key support on many charts as well as being extremely oversold, and we were looking for a bounce, and we did see that on Wednesday before the market got obliterated on Thursday and Friday, dropping almost 10% in 2 days. Now the question is the pain over or just getting started? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, as always, before we jump into the charts, we are going to take a look at the results of the indicator. And with all of that volatility last week, you might think that it could have struggled. However, it absolutely crushed the market again. We're going to take a look at that. If you're new here, we built our own custom trading view indicator. We're going to take a look at that, and I'll explain it in just a moment. As a side note, I will be live streaming today. I'll be on at 6 a.m. Pacific Standard Time, 9 a.m. Eastern, before the market opens, and we'll live stream the trades from there. Now let's jump into the indicator charts and take a look. Okay, guys, so here we are on the 5-minute SPY chart, and this is what we use for day trading. And if you're new here, we built a custom indicator. It's called IWJ Invest with Jacob, IWJ Pivot Point Pro. It's only in TradingView because they do cover their code. It's right here. You can see IWJ Pivot Point Pro. We turn it off and on. You see the symbols come and go. And what we saw was the indicator absolutely handle the volatility perfectly. This is last Thursday, the first major down day. And we got a sell signal right here at about 544. They ran it down to 539, a 5-point move, pretty much straight down here into our buy signal, which was right at the bottom. They hit it at 540, ran the market back up to 545, so another 5-point run up straight up to the top where you got the sell signal again at 545, and they ran that down here into the 540 zone again. So you had 3 5-point trades on Thursday alone. And remember, we stopped trading at 10 a.m. Pacific Standard Time. Now, that doesn't mean if we're in a trade that we just close the trade and go away. It means that we don't open any more trades after that time. And the reason is the market tends to get choppy and weird after the second half of the day, so we don't always trade that. So on Thursday alone, 5-point trade, 5-point trade, 5-point trade, all winners, absolutely killed it. On Friday, if we move over, and what you're looking at here, the blue is the post-market, the yellow is pre-market, and you have to have those on for the indicator to work properly. You also have to have real-time data on the futures of ES and NQ to get proper signals, because the indicator does look at all 3 charts at the same time and gives you a buy or sell based on what they're doing and what the indicator does. So on Friday, quick sell down. The sell came before the market opened, so we did not have this sell. The market ran down. Then you got this buy right here at 514. They ran it immediately up to 522. So that was a 7-8 point move up, just depending on where you stopped out or closed out. That was an insane, awesome run up. You got in down here at 516. They immediately ran it down to 510, another 6-point move down. And then right here, I believe, nope, that one was after 10. So you only had 2 trades on Friday, both really nice big trades. Absolutely killed it. You had 5 trades of 5 or more points on these days, guys. This is absolutely crushing to do that. Now, if you go look at today, or yesterday, I should say, Monday's chart, okay, so we'll go through the weekend. Where did you get the buy? Down here at 488, and they ran it all the way up to 523. That is 12 and 23, guys. Do the math. That's 35 points of upside on one trade on one day, and the indicator absolutely killed it. Then it turned right around and gave you the sell signal, ran it straight down, gave you another sell signal, ran it straight down. An absolutely crushing day for the indicator. This was a losing trade here. This was a double win for us, just because I had entered. They pulled back a little bit. We made money on the first trade. They pulled back, set it up again. We entered again, made money on the same trade again. And then this one here was right after the bell at 10 o'clock, but it was a crusher too. But we didn't take that trade because it was after 10 o'clock. So all of these monster trades, when the market's moving all over the place, people are wondering what the hell is going on. The market's dropping like a rock, and we get a buy signal that goes up 35 points. This is helping traders who don't understand what happened in all these high volatility days make crushing money, because they know when to get in, they know when to get out. I live stream it every Tuesday. You can go back and watch our live streams. It does an incredible job It catches tops and bottoms. It is forward-looking price action. It is not about moving averages crossing or something that happened in the past that may predict future stuff. It is looking for support and resistance. Guys, it is helping traders beat the market on a daily basis, and I want you to be a part of it, and here's how you get it. There's a link down in the description. Go ahead and click that link, and it'll take you over to our webpage. Once you're there, scroll down just a little bit. You'll see our monthly rooms, and if you scroll down a little further, you will see Trading View Indicators. Right now, the monthly is $59 a month and $5.90 for the year, but I'm giving you 25% off of the first month if you want to try it monthly. And we also have another deal that I'll tell you about later where you can buy this yearly indicator where you already get 2 months for free and you get half off of another course that we have. So running incredible deals on the indicator right now, and it's killing the market. You guys need to be a part of it. You get a 30-day money-back guarantee. So you can just buy this. Okay, put it on your chart for 30 days. Don't trade it. Just watch it. See if it does what I say it does. See if you would have had winning trades. Paper trade it if you want. And if it does what I said, at the end of 30 days, keep using it and move forward and make money like everybody else is doing. If it doesn't or you don't like it, you didn't spend anything, you didn't trade anything, you trade it back in, I'll give you your $59 back, or if you got the yearly, your $5.90 back, and we'll both go our separate ways. No issues, no questions asked. Unless I just kind of want to understand what you're doing, because sometimes there's a learning curve and I can help you out with that. Guys, I really want you to be a part of this. I know you're going to love it. You need to check it out. Now let's jump into the charts and take a look. Okay, so like we talked about before, we're looking at completing this A, B, C down for a minor A here. They spiked it up pretty good and broke back above the April lows for just a minute, then came back down, and they're closing at about the gap from Friday. So basically going to close flat on par with Friday. But the bulls are trying to find a low here, and given how oversold we are on several different metrics, I do think that the most likely scenario is still a bounce back up to 56 to 5800 from here. Into this consolidation that we broke down from to back test it in a B wave. And then from there, we'll be looking at a major C leg down to the October lows from either 22 or 23. So anywhere in that 34 to 100 to 4,000 region on the next move down. And again, this would just be the start of the correction. So the overall move, this would be an A, B, C for a bigger A leg. Then we'd be looking for a B wave back up into the 5,000 area that should take several years and be really choppy and ugly, much like the RTY was for the last 4 or 5 years. And then we'd look for the next leg down to start. That would take another 4 to 5 years to complete. And overall, a potential 10+ year correction should they follow through and play it out this way. We do have some alternates to the upside. The overall look for the upside needs to basically hold where we are right now, or there's a bigger potential should we get down to the October lows of 22. We can look at that as when we get there, there'd be a potential for that to be a bottoming area that could lead to a new wave higher. Again, too much to get into and too far ahead of where we're at right now. But again, ABC looking for a B wave bounce back up into 56 to 5800. That will probably take us, through the spring and into summer, and then toward the end of summer start making our way back down in this C wave. These are going to be big moves that have multiple waves. So that C wave is going to, have a move down that starts, gets us back down to here, and then it's going to have a bounce that takes a while, and that'll be 1 and 2, and then we'd look for another kind of setup like this before ultimately breaking down. So this isn't something I expect to happen overnight. I do think this move down will take some time, and the move up as well will take some time. So I think 3,600 into the year, into next year, I think is very real. It'll especially depend on how we do when we get up to this 5,800 region. I expect a rejection there either way, but If that rejection is what we expect it to be, we're looking for a major collapse. If not, they can try to hold, and if they come back above that high, then we can start talking about other bullish options. The high on January 3rd, 2022 at SPX 4818 is quite crucial for some counts. Is it as possible? One, what are your thoughts since it has not been breached so far? I concern myself more with the prior wave 4 low, which is the April lows. That change of character in the market is quite substantial. Of course, getting into wave 1 does. January 3rd, 2022 is a wave 1. I don't think that's accurate. January 3rd, 2022, we were about 4,800. Well, I guess that's probably close to accurate because that's about where we're at now. That is definitely not a wave 1, in my opinion. That would be projecting us to like 9,000 on the market, and I just don't think that's feasible. Can you please remind me why wave 4 of 3 must be higher than wave 4? Hence, April lows are important. Thank you so much. Corrective depth theory tells us that wave 4 of 1 larger degree should not be deeper than wave 4 of 1 smaller degree, which is why the COVID lows were so important, and other lows. In the training course, you can go through that wave 4 properties and corrective depth theory class that is in there. On ES, why do you think A wave is complete when the C wave of A is missing a 4-5? Because the spike is so high. This is way too high for a wave 4, so it's going to be some other kind of count. 4 and 5s, you'd love to see. I mean, obviously in open book interpretation, you want to see a 382 retrace and then a move back down. You don't always get open book patterns though. Any other questions on the ES? Right now, the 49.10 level is pretty crucial support, and 49.10 to 49.25, the bulls want to hold to continue pushing back up. If that breaks, we could definitely see continuation lower. Wave 5 could take shape as a diagonal at that point, I suppose, with wave 4 being so big. But in general, you're going to want to see 49.10 to 49.25 hold on the futures. On the NASDAQ, we have similar setups. The NASDAQ bounce was much stronger and higher, also making it much less likely that we're going to see a 4-5 to the downside, and much more likely we're in a bounce. That bounce, again, would take shape as an ABC back up into this 19.5 to 20,700 area. We would expect rejection off of this area, and then how it comes down off of this area will be extremely important. But given that the NASDAQ breached the April lows by quite a bit, it wasn't like they spiked in reverse. They went down 2,000 points below it, or 1,500 points below it. That is a huge red flag. The RTY is a huge red flag. SMH is a huge red flag. NVIDIA is a huge red flag. So bull counts are in major jeopardy right now. And while there's always opportunity for the market to do whatever it wants, we do the most probable things and play the most probable situations. And the most probable situation now is that the top is in, and we would be looking at a corrective bounce back up into this 20,000 area, into this basically the range they broke down from before, right here. And then from there, how they turn down, we would expect a impulsive move down, so a quick start to the down move, which would bring us down, a wave 2, and then like this, and then continuation after that. So I do expect this bounce to be very, very choppy because the selling is so strong that each time the bulls try to rally, it's going to be met with force, and that will likely lead us to seeing a very choppy B wave higher here that can have a lot of ups and downs and be very difficult. And like I said, it should take some time because they're going to have to reset the MACD. The market needs time to breathe and heal after big selling events if it's going to continue selling. And the biggest reason for that is there are no buyers. Nobody wants to buy the market as it's screaming down. So the sellers can't sell to anyone. So what happens is the big money pushes the market back up, creates fake bullish behavior. Then people want to buy the market so they can sell into those people to lower the market again. That's why bulls need bears and bears need bulls, because if nobody's buying down here, they can't sell. So there's no liquidity. So what they do is they spike it higher like this. And once everybody says, oh, the bull market's back, we're going to whatever number, they sell right back into them, and then they can panic sell them again. So overall, that's what we're looking at right now. This bounce will be very important. If it holds this area we're talking about and turns down impulsively, it will be a pretty ugly sign and a big, big, big warning for the bulls right now. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link, and it'll take you right over to our website. Once you're there, check out our membership plans area. We have 2 incredible monthly plans, and they both come with a 7-day free trial. That's because I want you to get in there. I want you to make sure you love it and become part of the trading team before you ever spend a penny. You can cancel at any time. You literally have nothing to lose by checking us out. We also have our educational material. If you scroll down a little further on the page, you're going to see our indicators, which you saw in the first part of the video, and also our courses. We have our Trade Waves Academy course, and right now I am giving 50% off of this course if you get the yearly indicator. So if you buy the yearly indicator right now, you're getting 2 months for free on that, and then you get Trade Waves Academy 50% off. In Trade Waves Academy, we go over all of the things that are outside of Elliott Wave to put a complete package together. We go over market psychology, capital management. You can see all the modules here on the screen. Options trading basics, candlestick patterns, how to trade price action, bull and bear traps, how to identify market reversals, fib levels and why they're important, how to identify key support and resistance, and trade setups and proper risk reward. All of this comes inside of Trade Waves Academy. On top of that, you get our Elliott Wave for Beginners course included in this price, and you get the Advanced Elliott Wave for free included in this price. So for $497, you get all of those modules I just said, plus the Beginners course, plus Advanced Elliott Wave. It's an incredible deal, and you can get it for half off right now if you get the yearly indicator. Now, as I did mention, we do have our Advanced and our Beginners Elliott Wave courses. In our Advanced course, we're going through a lot of the things we're seeing on the charts right now. A lot of those things are the advanced fib levels, the diagonals, double and triple threes, flats, triangles, trading Elliott Wave, which right there, that is worth the price of admission. People don't understand that there's 2 paths and how do you trade them if there's up and down. It's because you trade setups, and there are very good setups in Elliott Wave Theory. You have to know how to spot them and trade them, and we talk about that here so that you can understand how to do this course. Now, I understand if this is too advanced. You can see, though, that our traders love it. But if you need to get started at the beginning, we have our Elliott Wave for Beginners online course. And this course is really helping traders understand a complex market in a way that makes sense. It's extremely confusing when good news makes the market go down, bad news makes the market go up. It stops at random places. You don't know what's going on. That's because the news cycles were garbage. Elliott knew this long ago. He knew that key levels mattered. It's not random, and it's you're able to find these key levels, and this is what gives you a huge advantage over the rest of the market. In this course, you get 25 videos where we go through your introduction. We have to introduce you to Elliott Wave Theory. We have to get your mindset right and give you the KISS method, how this works and why it works. It's very scientific based. People think it's just, oh, you just make a wave up. No, very scientific based. It's outstanding. Chart setup and tools. We go through all of your chart setups, every tool you need to use with Elliott Wave, how to use it and why we use it, and then the Elliott Wave for Beginners area where we go through each of the waves, how to find the key levels, how to understand impulsive and corrective waves, how to know where to get these measurements, the corrective depth theory, the theory of alternation, the pivot, everything you need to make sense of an irrational market. Now, the really cool thing about both of these courses is there's several ways to get them cheap or for free. You can get them both at a $37 discount with our Elliott Wave course bundle. You can get them for free in our Trade Waves Academy course. If you buy that, they are included in that course. Or if you just want to get them at a low monthly cost, you simply get one of our monthly rooms, as the Elliott Wave courses are included in this price. In our first room, the Invest with Jacob room, we give you all of your real-time market updates, all of your buy and sell alerts, all of your Elliott Wave questions are answered. The midday video that you watch in these calls, that's live for everybody in these rooms. And then you get the beginners and the advanced course included in this price. We trade the SPY and the QQQ, and we swing and day trade. So we do trade quite often in my room. Now, if you're looking for futures trading, individual stocks, income trading, and advanced trading, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as the individual stocks, the futures trading, his income trading method that just kills it, and his reduced risk binary method that gets you in at a cheap price, get you huge multiples on your money, and it's how he structures that trade that's so unique. That's why you get a 7-day free trial. He also started a challenge account where he put $4,000 into an account trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we'd love to have you in these rooms so we can all make money together. Thank you for watching. We'll be back tomorrow with your next market update.